Good evening, everybody. Welcome to the market strategy session for the week of October 19th, 2015. My name is Michael Saul, and I'm joined with me by my co-host, Paul Schatz. Let's talk about the economic reports that are coming up this week. Okay. First of all, let's do a quick sound check. Can everyone hear me? Testing, 1, 2, 3. Yes, no? Okay, good. Everybody says fine. Okay, good. All right.
No.
10 o'clock, Brainard speaks on Monday. Tuesday, building permits, housing starts, pre-market. Dudley speaks pre-market. Powell speaks pre-market. And then Yellen speaks at 11 a.m. on Tuesday. Wednesday, the weekly crude oil inventories. Thursday, minimum bid rate ECB press conference. Those are Euro rate change talk. There won't be a rate change in the euro, will there, Paul? Will they raise rates?
No, I mean the big thing about the ECB is more QE.
Okay. Unemployment claims, the weekly unemployment claims. Existing home sales happened during the session. Then Friday got some French and German flash manufacturing, but they're early in the morning. Nothing during the day. I mean, you got the flash manufacturing, which is ranked a yellow. And then on Saturday, it says 10 p.m., which is strange. We shift to daylight savings at 10 p.m. now? We don't do it at 3 o'clock in the morning? It's a little strange.
2 in the morning.
Yeah, that's what I thought. But why does it say 10 o'clock?
Where do you see that?
Right here.
Oh, I have no idea.
All right, anyway, we lose an hour, right?
So
So,
wait a minute. It says Europe on it though.
it's the Europe. Oh, there we go. That's why. Thank you, Mike, and thank you, Paul. Okay, whatever. Don't listen to me. But wow, that's really strange. Why would they care about posting that? All right. So the S&P futures are down 4.5 points, and the bulls continue to do their best job of freaking out all the aggressive bears that thought we were going back to a new low. Me being one of them. The difference is last week I got neutral once we picked up over the 50-day moving average, and then after a couple of days early in the week of a pullback, bulls really asserted themselves. Now, in my opinion, we are far from out of the water yet. I'm sure Paul will have his own opinion on this, but we do have resistance to get through still. We have horizontal resistance here. We have the 200-day moving average. But like I said in the mastermind session today, I mean, we're only, Paul, at this point, like 5-point-something% away from new highs. We're not even that far away. It's only 10 points, 10 and change, right? So what is that? 5.3, 5.4%. We could fiddle-diddle around the rest of this month, half of November, all of November, and we could get that in a Santa Claus rally, in a Hanukkah boy rally, whatever you want to call it. Okay? So, yeah, I mean, we're really close to that high, but I don't think that this consolidation up here that we broke down from should be taken lightly. I don't think it's just no big deal. Past support does become future resistance. This line held once, twice, thrice before it got broken down. And it's now, change of polarity, as Paul's friend Steve Nissan says. Old support becomes new resistance, old resistance becomes new support, right? So I don't think it could just be brushed aside like, we're definitely going to the 200-day moving average here. I remain neutral because we're stuck between the 50 and the 200-day moving average. However, I am very impressed that the bulls are showing a really good job here. The NASDAQ is the only one of the five major indexes, that is above the 200-day moving average. Paul will go deeper into these, of course. But Still hasn't gotten above this little September, what I like to call the New York salute up here. Okay, so yeah, it's over the 200-day good. I'm not saying that's a bad thing, but we still have to get above here. No, I'm not talking out of three sides of my mouth, Scott, but thanks. I'm neutral. Okay, but that being said, I am not just taking it lightly that we're heading into resistance here and thinking, the bulls will get through it once again. Maybe they will. Maybe they will. Maybe this was all just a bad dream, just a little speed bump instead of a total V reversal like we saw back here in 14. Sorry about that, everybody. Maybe instead of a total, just a flat out V here, maybe it's a W or whatever it is. Okay, could happen. But let's prove it here. Let's get through the resistance. With that being said, I hand over the reins to Paul. Paul, can you see the questions? Or do you need me to make you no, you still can't see the questions. Wow.
Correct, I cannot.
I know. I'm seeing it here. Wow. Very strange. I don't know what. I think something happened with the. It doesn't matter. Please text me when you're done, okay? Because I am. My middle son has a feed.
Yeah, Tiny Ryan just said, doesn't matter.
Doesn't matter. Yeah. Anyway, text me when you're done. Don't forget, so I can put this recording up. All right. Bye.
So picking up kind of where Tiny was chatting about, and this is why, two people can look at the same market and have very different opinions. I mean, Tiny he likes to wait for confirmation in a long time. I like to hop on lows, which is why those of you who've been here for a while know that we hopped on this low immediately. I thought this was the internal low. I said it as it was happening. I wrote about it ad nauseum, and lo and behold, it was the internal low. All the crash studies I did, which I publicized and did on TV, I said we were going to rally into middle September and put in a secondary low. The only question for me was, were we getting a full retest down here, or are we putting in a higher low? So some indices did one, other indices did the other, but I was clearly bullish last week, looking for any kind of weakness to buy, and going into this, same thing. So it just depends if you want to play it more conservatively and wait for confirmation. I never have, I probably never will, because there's so much money to be made on the initial bounces off of bottoms. The volatility is the highest, and if you catch it right, you can make a lot of money. You catch it wrong, you can certainly lose, but over all the years I've been doing it, I think I've probably caught more than I've lost and doing all right. So my philosophy remains the same. I believe the bulls are firmly in control. They're going to be in control. I think you can buy any weakness, like I've said for several weeks, and I think we're going to all-time highs. So nothing's changed on that front, and I still think Dow 20,000 is on target for next year. So that's the short, intermediate, and long-term picture. Here's the Dow. Clearly it's overbought with stochastics. Exactly what it's supposed to be during the first rally. Don't get fooled. When you go back and look off of pretty good bottoms, the first rally, stochastics gets overbought really early, and then it powers higher. A clear sign the bulls are in control, which has been the case. Okay. The spider, which we talked about last week, here's how it looked going into last week, and I said, bulls are in control. Don't be surprised for a brief but shallow pullback. You got to buy weakness, and you got 1, 2, 3 down, kind of down days. We'll call them 3 pause days, and then boom, bulls right back in control. That's the norm off of a major bottom or a significant bottom. They don't give the bulls a chance to get in. So if you don't buy down in here, if you didn't buy here and you didn't buy on the pause day, you get a little opportunity, and if you don't buy, well, you got trouble. Our Are we overbought? Yep. Could we support higher prices? Yes. Anything other than a mild pullback would be a head scratcher. At some point, we'll pause and we'll go sideways for more than a couple of days. But right now, the bulls remain in control. Mid caps and the small caps are not as strong as, let me go back to the indices, get rid of this ETF nonsense. Here's the mid caps. They've yet to take out their September peak. I bought mid caps this week, and I think they got a good shot this week or next week of blowing through the September highs. The mid caps and small caps have this really nice look down here. Really nice. Here's the Russell. Same thing, lower low. Clearly it's weaker. I expect the Russell to step up and take out this peak as well. Qs remain in a leadership position. Hold on, let me pull up the NDX. NDX, so we're right at the September highs, which, as I said last week, I think we're blowing through, and we're going back to new highs on the NDX, and I think all-time highs, I don't know. I'm not sure if again this quarter, but certainly early next year. So those are the U.S. indices. Here's Europe, which I continue to own from, I forgot, maybe it was a week and a half ago I bought Europe. Consolidating nicely, and I think Europe's blowing out these highs shortly. Emerging markets, I have not done a lot with it. It's been a nice rally. You get a 20% rally in emerging markets. I don't think I've done any trades of significance. Why? Because the damage was so severe on the way down, and I'll be a little slower hopping on board this. But sooner than later, this will pause, consolidate, and give me a better entry on emerging markets. Let's see. So before I blow on, any questions? I just see Mark, you posted a Go Cubs. It's great for baseball, I think, if the Cubs win because they've lost for so long. But I just found out I can go to if there's a game 6 in New York, I can go to game 6. I got to kind of figure out how to root, because I'm on route for the Mets. Let's see. Scott asks, EEM looks same as S&P, but I don't think so. Scott, not really. Look at the decline. EEM is down from 44 to 30, 14 points. So let's just round and call it 30%, a 30% decline. Where the S&P, what happened? Where the S&P is down, 12%. So a 30% decline is, at least for me, much more significant than the little pullback of 12%, whatever we're calling it. So that's the distinction I make. I think one is much more damage than the other. Domingo, what would confirm a bear market? An awful lot would confirm it, Domingo. I mean, there's plenty of things present today that would say either you're in a bear market or you're about to go into a bear market. I just don't think that it's here yet. I think there's way too much bearishness, way too many negative people. Sentiment's bad. Put call ratios were bad. Inverse ETF volume was bad. All these things support further rally. So the confirmation of a bear market are certainly, you don't have enough things in place today. But you will when the bear market hits. And I guarantee you that I'll be wrong on the first leg down in the bear market. Guarantee I'll be wrong. Bill, did I say Bill, EU means what? Euro, Europe stocks? What's EU? stocks. Yeah, I mean, Bill, European Union. Um, I think Europe goes higher, Bill. I think I talked about it during the collapse that I couldn't figure out what to do with Europe. I started to watch. We started doing this here, back in here. I said Europe is really interesting, but I couldn't. It was very sloppy down here. I did not know what to make of it. So what did I do? I made nothing of it. But a week and a half ago, I got long Europe, and I'm still long Europe for whatever that's worth. Which, if it goes down, it won't be worth much. All right, let's forge ahead. 3 key sectors. I'm gonna include consumer discretionary in there. So we'll talk about 4 key sectors. Trannies had a terrible day on Friday, but they're not acting poorly. They're just not as strong as they were. But this is Scott. Here's another one that they've been down all year, right from the get-go. And now they're looking clearly a little more. They're looking as good as they've looked all year right now. Friday was a terrible day, but let's not become Jim Cramer and call for a bear market right here. But they're not as strong as they maybe could be. Here the banks had a terrible day on Wednesday, but the real key in the banks was up here. We talked about this. So that was a week ago. We talked about this last week, and this is not a good sign for the banks. And in all likelihood, the banks should struggle for this week as well. But ultimately, I think the resolution of the banks is up here. I think we're going back towards probably, 40-ish in the banks. Semis, on the other hand, semis still, I've said this for a couple weeks, still look good. They're hanging in nicely. They're way above the September peak. And now they're challenging some of the consolidation from July. Don't forget, Scott, here's another one. Look at the decline in the semis. They were down from essentially 101 down to 73. I mean, let's call it a 30% decline in the semis, similar to the emerging markets. So eventually, when markets turn, those that fall the most initially bounce the most. Semis being a leadership group, they're exhibiting pretty good outperformance now. So semis look good, and consumer discretionary, which I've spoken about many, many times before, also looks good. Only a solid 1 week from all-time highs. 1 week in discretionary is at all-time highs. So we keep hearing from people how the consumer's dead, the consumer's dead, the consumer's dead, and I keep saying there's absolutely no shot the consumer's dead, and they're not dead. I think XLY is going to all-time highs as well. So those are the 4 key sectors. 2 look really good. 2 don't look bad. They just don't look great. Scott, you said Cramer has invoked the S&P proprietary overbought, oversold indicator. Says it's over 10 overbought, and to stay away. I can't find any proprietary. Oh my God. I don't know. Cramer was like talking about this monster. He talked about this monster bear market, and then when stocks began to rally, he said, he never said that. So, God, he is bad. I can't figure out how anybody would follow him. Although my grandmother did for a year. I have to say that. My grandmother told me how brilliant he was for a year. And she couldn't understand. She followed all these stocks, and then she never made any money. And then she kept blaming herself, saying that she didn't buy them at the right time. Whatever. Okay, let's forge ahead. Other sectors, software still looks amazing, right? Except for like a 4-day, look at this, 3 days in August, but except for these 3 days, software's been probably the best group on the board. And guess what? This too is going back to all-time highs. And this is one of the best groups on the board. Still, it's been the way all year long and last year. Software. Telecom, which has really frustrated me. I thought it was going to be a good sector for the second half of this. No, for the full year. I'm sorry, I said for the full year, and it's certainly disappointed. But I do like it. I still like AT&T, and I still like Verizon, but they're certainly not led. So what to make of it? This looks neutral. I do like the big stocks in the sector, though. Diversified financials. There they are. This whole bad tick just makes it look difficult. But the group looks okay. Not horrible. Looks okay. Retailers, leave them alone. Don't go near them. Stick with the consumer discretionary. This is really weak down here. So I wouldn't want to go anywhere near that. Home build is one of my groups for the year. I also think is a buy right now. I think they probably poke up here, pull back, and then go. I think that this has got a 40 handle on it by early next year, which would be obviously a double-digit rally. I don't want to do that. Let's go on. XLI and XLB. I have a negative predisposition to XLB. XLI looks okay, and here's your pause. If you're a bull, this is the spot to get in. They're giving you the spot right now. I just haven't been on these all year, and I'm not going to start. But if you're a bull in XLI, now is the spot to get in. XLB, same thing. This is a nice pattern down here. It's one that I like. Flush out the lows, reverse, and go. Here's your pause. So if you like XLB, it's the other one. Now's the time to get on board. Energy and energy services, which I did some buying here last week as well. I bought some XLE last week into the pullback. And what do I think? I think XLE is going higher too. I think we're going to probably get a test up towards the 200-day moving average. I did not buy more OIH, which I have a small position in, and I've had it forever, and I'm underwater in it pretty good. But I'm staying patient, and we'll look for this to resolve itself higher as well up into the 30s. XLV, which I own and bought more of last week. I'm growing more impatient. I told you guys this that I don't love the way this is acting. It's fallen off my hit parade, and I'm going to probably transition out of this into some strength. Well, the strength came Thursday and Friday. If we can get a little more strength this week, I will likely get out of XLV. And IBB has been the bane of my existence. It was my home run sector for 2013 and 14. And then until early July, and now it's been the bane of my existence ever since. So I still own it. I added to it last week, and I will probably be selling it into strength and finding other sectors because it's not working out. Let's see what else. Defensive, XLU utilities. They've had a nice run. Can't argue with the run whatsoever. I just don't have any opinion on them. We're just about to close the gap from here. Overbought. No real opinion. REITs. They trade kind of similarly to Utes. They look fine. I just don't have a strong opinion on it. The bottom was too sloppy for me, so I don't really have an opinion on that. And XLP is a monster. Consumer staples. So here's the hard part of the market we're in right now. Staples are leading. Staples are a defensive sector. It's a recession trade along with utilities and telecom and REITs perhaps. But this looks like it wants to go to all-time highs much sooner than everything else, so you should be on the lookout. However, consumer discretionary also looks good. It's a rarity when they both lead. I'm just sharing. I don't have a conclusion because I didn't do the homework, but it's a rarity. And I thought, so you guys like TAN. We talked about last week, tan looked good to me, and it still looks good. It's beaten down to death, essentially cut in half, down 50%. And I got a solar guy coming tomorrow to my house, so they must know that I'm about to buy solar. And tan's rallying. But this looks like still it could support higher prices. What else? GDX. I said this last week. I thought this was the end of the move right there. That horrible doji. I said, wow, gold's done. And the next day, I go, oh my God, wow, they trapped all the bears. And then what happened? Now we get another reversal. So 2 out of 3 big reversals. Pause. Boom. So 2 out of 3 reversals and 2 out of 3 days of reversal, and 2 out of 2 the next day or 2 days later, they trapped all the bears. They trapped the bears here, and they trapped them here. And now, what is it? I have absolutely no idea. I have no opinion on this. Thankfully, I didn't get trapped, but I don't really have a strong opinion on where the gold stocks are going right now. What else do I like? Internet sector. Oh, it's crump. Hate these freaking. This is going to be with us for a year. It's going to be very frustrating. So let's go to a mutual fund. So here's the Internet Mutual Fund. I mean, it looks great. Yes, it's overbought, but it's certainly support higher prices, and I think this is going to all-time highs too by the end of the year. Let me pause for questions. Home builders into winter. Scott, to me, they haven't done anything wrong yet, so I'll ride that train a little longer. Anything to say about the correlation between biotech and the Russell? Mike, no, because I've never done the work, but if you've got something to share it, and I'm happy to go test it this week. But I don't know the correlation between biotech and the Russell. Benji, I covered IBB. I said it's frustrating that bejesus out of me, and I'm going to likely sell it into strength. That's what I said. Last night for my anniversary, my wife and I went to the we went out with friends to dinner where we had too many bottles of wine, and then we went to the Book of Mormon, which I didn't know anything about it. And I'm still, as I think about the show, I'm still like laughing. It was so funny. It was probably the most I've laughed in a long, long, long time. So if you haven't seen that show, it's pretty good. Let's see. Oh, no, Scott, I know there's a lot of small cap biotechs in the Russell. I just don't know about any kind of long-term correlations. Let's see. I did not cover the VIX. Marvin, EGRX is a stock for Tiny, not for me. Here's the VIX. You guys asked me the VIX last week. I didn't really have an opinion, and I don't have an opinion here either. I mean, those of you who took our market timing course, the VIX gave a really nice buy signal 1 day off the bottom, so that was awesome in August. And I have no opinion down here. Sorry. Let's see. Somebody asked about the skew index. And Joanna, it's not an indicator that I use, I've ever put any work into. So I read about it when people send me stuff on the skew, but I haven't done my own homework on it, so it would be kind of flip for me to comment on it. All right, let me forge ahead, and we'll go from there. So we covered sectors. Let's go to bonds. Let's go to bonds. No, let's not go to bonds yet. Let's go to the NYSEAD line. Here it is. not doing anything wrong, doing everything right. Market's going higher, and the AD line is confirming each high, contrary to what happened back in the summer when the AD line went down, 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 and stocks were up, up, up. So doing all the right things in the AD line. Now let's go to bonds. TLT, which I have remained about as neutral on as possible because I have no clue. And if I don't have a clue, I'm not going to offer an opinion. So I don't know. Shrug my shoulders. Junk bonds, which I bought this week, and I got rewarded on Friday. I said last week to you guys that junk bonds look like they're close to confirming a trend. Is this the confirmation? I think it is. I'm on board. I bought J&K in big size, and I'm going to stay along it until they make me into an idiot. But I think this could be the rally into January for junk bonds. And the junk bond funds, like the PIMCO fund, also look equally as good. So I am an unabashed bull on junk bonds now, having not gone near them for a long time. So that's junk. Let's see, we did TLT. Let's do the dollar. The dollar, which, as you know, I'm a very long-term bull on, intermediate-term bull, and short-term are waiting for some kind of reversal, and it did not come this. Did not come this week. So dollar's oversold. So here's where stochastic should be good, right? Because you've got a trend-less market, and you buy weakness and you sell strength. So we should see some kind of dollar bottom this week. Should. And the dollar bottoms, euro may peak. So here's the euro, which looks like it's trying to peak as well, having gone sideways for 6 months plus. So there's the euro. And the yen, which I also still own, it's not really doing anything. It's kind of just meandering about for the last month and a half, 2 months. So nothing to speak of short term. Long term, I remain in my opinion that's going to go down 50% again. With oil rallying, guess what? The Canadian dollar rallied too. Nice rally in the loonie. As oil rallied. I only have an opinion on this. Let's see. Let's go to gold. Gold had another nice week. Similar to GDX, you know, it's been a sloppy run. I talked about, for a while I kept saying sub 1100 was my target in the third quarter. I got sub 1100. Yay. However, this is not how gold typically bottoms. So I don't know. The rally's been nice, and it probably goes higher. So gold probably goes at least to 1220-ish from 1183, but it just doesn't behave like it normally should out of a significant low. So I don't know what to do with it. Let's see. Crude oil. Consolidating the gains. Nice pennant. Broke out. Came back in. This week is crucial for crude oil. Put a star next to this. Crucial week for crude oil. It must rally this week. Must. Natural gas, which we talked about forever, as one day it's going to rally because smart money's been long this forever. But it ain't now, so we're still patiently sitting here watching it go sideways. Copper, we talked about the bottom here. We've got a test of the bottom here, nice little double bottom. We're slowly making our way up. Friday's action was not good, but I gotta believe this copper resolves itself higher this week. So I'd be a bull on copper going into the new week. Let's see. Copper, crude oil. What did I miss? The big ones. We got crude oil, copper, natural gas. Let's go to wheat. There's the warning sign. We got it from the bearish candle reversal, and that one rally day couldn't hold on, was it Tuesday? Yep, Tuesday. Not so good in wheat. You can look for a reversal, but wheat looks like it wants to go lower. Corn, maybe a little stronger than wheat, but nothing to speak of. Could not get going this week. Yep, could not get going this week. And beanos. So soybeans from last week. Soybeans of the three grains looked the best last week coming in, and boom, move. You know, if this is going to be a real move in beans, this should be a counter trend move, and it should resolve itself higher by Friday. So look for beans to be higher by Friday. If not, then this was a trap, and obviously it's going lower. But this portends higher prices this week in beans. Here's sugar, which we've talked about for weeks looking good. However, the smart money when it got out of sugar a couple weeks ago. Smart money used this nice rally, especially in here, to get out of sugar. So now it's pausing. It doesn't mean it has to go down right away. I'm just saying the easy money has typically been made in sugar. So if you own it, you put a stop in, and then you ride the train wherever it's going. Cotton, another one. Wow, I didn't see this week. That was a nice. Wow. And this one, last week we left cotton. I said that this looked like a good short potential. I said this probably any poke higher, you can use it as a selling opportunity. This I did not see at all coming. A monster day in cotton. So this would have ripped my face off, obviously. And now we're consolidating. Huh. Wow. Scratching my head because I don't think this is the low. But it's certainly a very strong counter trend rally that looks like it wants to go higher before it comes down again. So short term, I'd say cotton goes higher, and then intermediate term, eventually this low is going to be seen again. Cocoa is decent. In the bottom, my feet. Cocoa was bottoming last week. What to do with it? It's done nothing. So I don't really have an opinion on cocoa at all. Coffee, I couldn't get daily data on coffee downloaded. I was trying to find that correlation between coffee and Starbucks, and I didn't. And I don't have an opinion on it right now either. It stalled right at, Tiny would love this, perfect stop at the 200-day moving average, and now it fell out of bed on Friday. Can't say I have an opinion now on coffee, but I will get to figuring out the correlations. Don't have the data. All right, let me just pause and look back at your questions. Mike, is gold strength related to dollar weakness, and if so, is there significant dollar weakness? Well, Mike, when the dollar goes down, it's always a little tailwind to gold because they're somewhat inversely correlated, not as strong as you may believe. So yes, there is some truth to it. I don't think there's a strong trade in that right now. I don't think so anyway. JN said, after the close on Friday, the government started investigation of the telecoms. All right, well, that will be, so long-time readers know one of my favorite lines is, I don't care what the news is, I care how stocks react to the news. So let's see. So JN said there's some bad news this week coming in. Verizon, AT&T, IYZ. Let's see how the stocks react by the close tomorrow, not what the news is. Thanks, JN. Scott, if you owned individual bonds, would you look to sell them? That's too broad of a question, Scott. I mean, do I have profits in them? Are they investment grade corporates? Are they mortgage backed? Are they munis? Are they high yields? What kind of taxable event? Not that I really care about taxes, but I think it's too broad of a question. Like muni bonds trade great, and if I owned high yield cash bonds, I definitely hold them. I think high yield's going higher. Let's see. Adine asked, why must crude oil rally this week? It's at such a critical juncture. All right. So you have an impulse move. You've got a beautiful consolidation. You have a breakout from the consolidation to new highs, and now you've come right back into so Adine, whoops, come on. We broke out like we were supposed to. Here's your retest of the breakout. Any kind of close below Thursday's low, you know, it's too deep for this to be a bullish pattern. It would portend, you know, you're probably going back down for a retest. So crude's got to rally this week. Can't come back down and close below Thursday's low. Natty Gas. Oh, Jay, if crude does not move up this week, what do you expect of it? Oh, I think it's going to probably, if it breaks down, I think it probably goes all the way back sub 40. And then somebody asked for Natty Gas again. So let's dial down because this is, oh my God. This is such a typical bottom in commodities. It just goes essentially sideways forever. It bores the snot out of everybody. So here's Natty Gas. It's hard to get excited about this. Get a sore throat. How many of you can believe it's October 18th in Connecticut? I coached my daughter's game Friday night, and by the end of the game at 8:30, I had on 3 layers on top and a hat. Today's game, when I coached my son's games yesterday and today, we're now on a 6-game winning streak. Not that you care, but I had on ski clothes. I had a layer of long underwear. I had a turtleneck, a windproof vest, a windproof fleece gloves, long underwear bottoms, jeans, and then a pair of wind pants over that. It was bone chilling at 4 o'clock start. It was gray and windy and 41 degrees. So, and I had the kids duct tape their hand warmers to their bodies to keep them warm. And tonight I think it's going to be in the 20s. But the good news is on Mount Washington this morning, the wind chills were 20 below and it was snowing like a banshee. And for you skiers like I am, Killington opened today and Sunday River in Maine opens tomorrow. So there's a couple of days skiing in front of us before they close for the warm weather coming into the week. Okay, so I've detracted enough. But I did want to point out that my 7-year-old's team is now on a 6-game winning streak, having knocked off 2 undefeated teams. All right. Any other questions, comments, concerns about anything? Except for stocks. I'm not going to cover them. The only thing I will say is, you know what trades really poorly? Man, Apple. Apple cannot get out of its own way. I have a new client who came to me with a ton of Apple stock, and I've been trying to unload it, not stupidly. I hate selling into declines. I'm just, bad word, hoping to sell it into a rally into the 120s, but that doesn't seem like it's going to happen. So this trades poorly. Scott, not like his name. Scott. I went through, oh, Jesse, you know what? I didn't go through the meats because I didn't do the homework on them. Sorry, buddy. I apologize again. I gotta put it on a list. Johanna, I don't have a strong opinion. That's more, you can email Tiny on Walmart and on Netflix and get his view. The Walmart thing, forgetting about the stock performance, but the news was like what a shocker for Walmart. They usually do a pretty good job of communicating and massaging analysts. So the Walmart thing was a real outlier. Look at the volume traded. 100 million shares. That's crazy. All right, let's go Mets. Yeah, I see, Scott. Alphabet. Google's now Alphabet, which I thought was interesting. In Barron's this week, 75% of the people surveyed were positive on Google or Alphabet. Now the chart itself looks a little sloppy, but it looks like it wants to go higher. I mean, on a weekly basis, this is a nice consolidation of this huge move. So what would you think? You think it resolved itself, $750, $800, $1,000. Will it? I don't know. Any other questions, comments, concerns? Doesn't look like big money is hiding in conservative large caps as a cover your rear end move. JN, it does, which is not atypical coming out of a low, although my long-term kind of theme is, the Dow goes 20,000 and the Russell doesn't participate, neither do the mid caps, and this is kind of how it happens. Although, JN, I thought it would happen because the dollar got really strong, which it hasn't yet, and all that foreign money comes into our markets. But I think the market's not ready for that yet. But yeah, I do think big money is hiding in large caps. Yes. And will the Russell catch up? I own the Russell, and I just bought the Russell like a week or half ago. I do think it plays catch up, but I don't think it becomes the leader, Mike. Tyler, I don't really have the Volkswagen thing. I don't know. There's going to be congressional hearings, and it kind of makes me look and go somewhere else. Those things terrify me because you never know what a politician can say and do. Russell new highs this year? I don't think so, Mike. I think it's a trade, but I don't think it's new highs. You don't use, no, Scott, I don't use options at all to hedge. I'm not, I think I've said this many times before. I know what I'm good and bad at. Hedging with options is not one of the things I'm good at. Could I become good? I don't know. But I would need to do a lot better than I did in the 90s, which was not well with options hedging. Last call. I think it's maybe a split screen hour with Homeland and the Met game. Let's go Mets. Let's go Cubs. I think we have to all root for whoever wins the Met Cubs series to win the World Series. That's what we're going to root for as a group. Do I think Walmart could keep the Dow from 20,000, Scott? No. Don't forget, it's only a 30. Where's Walmart? $58 stock. It's not a high price. Well, it was high price, but it's not. I don't think it's a big deal. It's one stock, and the Dow is still 17 and change without it. So, IBM reports this week. That's a high price stock. You got these are not high priced. Apple is. Well, it used to be a lot higher priced. So I don't think that the Walmart thing is going to hold it back. Let's see. Johanna, do you know where the big money is still buying with lots of their money? I didn't look at the Commitment of Traders report this week. I looked at the Barron's search. So if you guys if you pick one publication to read, I'd read Barron's. I think it's pretty good for what we do. They had their big money survey, which is amazing, not surprising. It's so consensus. Everybody's looking for, everyone's pissed the Fed didn't raise rates, which I wrote about a lot, saying big money's is just stupid. They're bullish on stock, they're bearish on bonds. They think we go up, on average of 7%. What else? They think the economy kind of plugs along. Yes, Scott, there are bulls and bears on the cover of Barron's, but although I'm one of the huge contrarians out there, you can't use the cover of Barron's. Barron's has to put a market story on its cover unless they put a political one. So I don't put the same weight on having a bull on the cover of Barron's than I would if it was on the cover of Time or Newsweek or U.S. News and World Report. I said this, maybe I didn't say it to you guys, but when Bernie Sanders was on the cover of Time, I said, "Oh, that's the death knell. He is done." And I believe Bernie Sanders on the cover of Time was his peak. I think he's done. Although, as a Republican, I pray he's the nominee for the Democrats. Guys, I'm not going to cover stocks. That's a Tiny thing. If you're in our inner circle, Tiny does a separate thing for your stock questions at 7:20, I think, or 7:30. I forgot which one. All right, last call. Any other questions, comments, concerns, disagreements? The folks who used to come and yell at me don't come anymore here, or don't yell at me anymore. Anybody else? Okay. So, hope everybody has a good week. May, yes. Tiny will have the recordings. I'm going to text him right now and tell him to come on and put the recording up. So, yes, we'll do that shortly. I don't need hecklers, James, but thanks. The Commitment of Traders about gold, I think the last one I saw 2 weeks ago was a tailwind for gold. It was positive. Okay. Everybody have a great week. And talk to you next Sunday night. Bye-bye.